traders, welcome out to your market roundup. It is February 1st. Corey here with you. As always, we are going to be diving into what meaningful news is out there. There was an interesting midday reaction in oil markets in the US dollar. We'll talk about that. We'll talk about technical analysis and sector rotations. And then as always, we're going to try to highlight the very best trades, be it up, down, or sideways.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So as we come in and take a look at markets, kind of an interesting day. Markets up about 1% across the board. The oil markets and the dollar both sold off sharply midday, and that's when equities took off. There wasn't any major news or anything like that, but as you saw the US dollar and oil sharply move lower intraday, that same exact time equities started to take off. Looks sort of like just some buy program, sell program, something triggering that. But it fueled more follow-on buying and follow-on selling in those markets. On the daily news, if we look at a chart of New York Community Bank, you can see the big gap down and then further selling today. Regional banks, they're important certainly for the economy. Some would argue that maybe them selling off a little bit will push the Fed to cut rates sooner, but right now, disappointing price action there. And then we had some job numbers come in, and it was the worst monthly loss in jobs reported since the beginning of 2023. So the ugliest month we've seen in about a year. Advanced decline line, 72% of stocks advancing. Today, certainly a bullish day, like we said. And then the 50 MA has given a little bit of ground, but still 64% of stocks in uptrends above their 50 MA. Let's take a look at the S&P 500. If we break down this chart, we've talked about the consolidation that happened back here. You're in a mild bull pullback, but nothing out of the ordinary. We're still holding well above 4,800, still upward sloping moving averages, still in a bullish market environment. QQQ, same thing. Here was the breakout zone, mild bull pullback, starting to pivot back up. And the way these things work oftentimes is that when you've been on a big run that has been, let's say, hated, people have not really been on board with this for most of the rally. What tends to happen is a big blow off top. That's the final move. So watch for markets to intensify on the upside as a possibility. If that starts to happen, the short-term momentum can really carry to the upside if we start to run. But when it's a big capitulation day, a day where the candle is really big and bullish and people are just piling in and so on, that's what we call an exhaustion day, where you would want to take a step back, say, okay, that I think is the big exclamation point at the end of this run, and from there a correction or something more significant would be more likely. But for now, we're still upward trending. We haven't had that big exhaustive capitulatory type of move, so staying bullish. Sector heat map still very much in the green. We've got some earnings reports tonight out of Apple and Amazon and some other big companies that obviously will set the tone for tomorrow. When you look over here at banks, see this regional bank area? Bright red. See the insurance? Bright red. Wells Fargo's really sort of considered still a regional, and that's why it was being weighed down. Watch that sector a little bit here in the near term, because certainly that's where the pocket of weakness was coming from, was in that regional bank insurance space. So as far as markets are concerned, still bullish, still trending above the moving averages, still upward sloping. Not too much to add there. Let's look at some bulls, some neutral, some bear. So we highlighted Microsoft as a neutral on Monday pre-earnings, and that trade is working out wonderfully well. Already nicely profitable because the stock is right around the same prices and we've passed that big earnings result. So you've seen volatility, vega in the options, deflate. Regardless of what sort of neutral strategy you were playing, you should have some profitability already in any sort of neutral idea. Today we're going to focus a little bit more on the bulls and the bears. Let's take a look first at Dick's Sporting Goods. Here, just a price pattern. Now, the retail stocks have not really, most of them reported yet, but see the high base pattern, a breakout looms. Be aware that earnings are going to be coming out. But again, trend, momentum, look at the lower volume and the consolidation, just technically speaking, looks fantastic. Also on the bullish side, EWJ, which is the Japan ETF. This has been one that I've been highlighting for months. It recently consolidated. It's broken out again. Just continue to stay long things in that Japanese market. Here you can play the ETF. EWJ is perfectly fine. Still looks like it wants to trend higher. We highlighted Microsoft on the neutral side, and we highlighted that right around these levels. So even though, of course, there's always going to be some volatility on earnings, it went above it a little bit, it's gone below it, but we're right around the same levels. That's what you want to see in your neutral trades. Neutral does not mean that something will flatline. Flatlining is very unlikely. Neutral means that within the volatility, you keep finding your way back, and that's kind of where we've been thus far. If we look at a new bearish idea, I'm going to highlight Square. Now, this may be a mixed picture. I'm not ready to pull the trigger just yet, but notice the little bearish crossover, and this is what intrigues me. A little false move. From false moves come fast moves. So if this stock were to break back above these moving averages, I won't trade it. If we start to pivot over again, it confirms this little push above the moving averages as a false breakout to the upside. And that means from false moves come fast moves. I think you can target, and don't get carried away. We're still in a bull market, but from here, probably targeting something to the 58 range, a little bit of a new low, something like that. I mean, from 66 to 58, that's a pretty big price move, but somewhere in that neighborhood of just below 60 would be where I would be targeting this stock to be within the next couple of weeks. Markets are in a little bit of a pullback. The Fed has signaled that rate cuts are unlikely in March. The market is pricing in multiple rate cuts still beyond that time period. Payrolls come out tomorrow morning, and then earnings. We still have a lot tomorrow. We've got AbbVie, Bristol Myers, Cigna, Chevron, Exxon, all reporting, and then a big week for earnings next week as well. Hope you enjoyed the market roundup. Have a great weekend, a great day tomorrow on the non-farm payrolls, and we will see you next time. Goodbye, everyone.